Welcome to the first episode of Profitless on Purpose, the nonprofit-centered accounting podcast. Well, that's a mouthful, huh? But you might recognize some of our faces from the None of Our Businesses podcast, and we thought there was so much interest, and we actually have a lot of experience in the nonprofit space, and there wasn't anything out there for an accounting spin on nonprofit news and events and working, so we decided to start this podcast. I'm one of the hosts, AJ Wheeler. I've had an extensive background in nonprofit auditing, worked for a public accounting firm that specialized in nonprofit auditing. And I've actually worked at various nonprofits in different roles. And most recently, I consult in TCA for a number of nonprofit clients. But I'm not the only host. We have other hosts with me, and I'll let them introduce themselves. Mark, if you'd like to take it away there.
You bet. My name is Mark Palardy, and I am a big fan of nonprofits. I really enjoy nonprofit accounting. I come from a background where I worked at a museum/library for a little over 6 years in the accounting department. And I've also been a board member as treasurer on various nonprofits here locally in the Portland area. And I have a real passion for this kind of work. So I think coming together and talking about nonprofits and some of the idiosyncrasies, and I think this podcast is going to be a little bit different because we're gonna bring in some expert voices, maybe do some interviews. We're going to talk about some nonprofit related accounting topics, and then we're going to look at the news as well. So I think we're in for a good ride. It's an experiment, and we'd love some feedback. If there's something you want to see in the podcast, we're open to it. We're a blank slate right now, and I think we've saved the best for last. So our third co-host on this podcast is Lisa Sheldon.
Hi, I'm Lisa Sheldon, and I'm excited to be here as well. I have an extensive background in auditing not-for-profits, working with not-for-profits, and just find that the work is interesting. And I've always found something new and exciting that has happened when I worked with a not-for-profit. So the first thing we're going to do is we're going to talk about an article. And I read an article in the not-for-profit or the Nonprofit Times called, the title of it is Technology Comes to the Forefront Amid Nonprofit Programming Changes. And it really relates a lot to what's been going on with the pandemic and how things are happening is a big part of it. But really what the article, the heart of it is really that they've talked to 500 plus not-for-profit leaders, and their technology woes are huge. Over 35% said their biggest internal frustration is basically just that they have lack of process automation and just organizational efficiency overall. Almost that many said that their struggles come from multiple disparate systems. So they may have one system for accounting and one system for medical records and one system for billing, and it's difficult and time consuming. About 30% talk about manual reporting. I've been there, I've seen it. It is a struggle. It is a nightmare sometimes, depending on the system that you're using to get good reporting. And, you've got a not-for-profit that has a team of 3 or 4 people they're just strictly doing reporting. It becomes a lot. And just lack of visibility. The other big one was lack of visibility over any kind of real-time information as far as key data and just managing their programs, program metrics, things like that. So really, very few of them use their tech for analytics, budgeting, or planning. And so I think it's a big area that could see a lot of improvement in the future.
Yeah, I definitely agree. I think one of the interesting aspects of any business really, but nonprofits usually have to plan out several years in advance as to how they're going to ramp up their technology. And then COVID hit, and all of a sudden there were all these people, these employees who needed to work from home, and not nonprofits, especially those who live close to the line and don't necessarily have an excess of funds, didn't have the capacity to just ramp up a paperless system or a work from home system. And I think as we move and continue to move through the pandemic, I know we'll talk in future weeks on job losses and changes in the nonprofit sector as a result of the current economy we're in. But I think it's not surprising, given that, the nonprofit sector is really driven by the mission and not necessarily by being the most current and up to date. I know in a place that I worked, the struggle to get away from paper is real, and really there was a lot of resistance to doing anything differently, because if it's not broken, let's not fix it. And frankly, as we move forward, they realized, oh, well, now people have to work from home, so the system is broken, and necessity is the mother of invention. But AJ, I'd be curious to hear your input on this one.
Yeah, it's I think when I was in public accounting, I worked at an accounting firm. We'll talk later about the other side of the table, I guess, of this from a public accounting or an auditing standpoint. But often when you would be doing the audit of a nonprofit, it was very old school, and like, unlike, I guess not unlike a business, but their a nonprofit is very cost conscious, I guess. And a lot of these solutions, for remote work or paperless systems, or being able to do all this stuff on the fly, access to your information remotely, it can be expensive if you don't know the right routes to go through. And if we have any people listening in a nonprofit, I urge you to sign up with TechSoup, because they make available, discounts through their membership program that you have access to. Like, for instance, QuickBooks Online, you get a screaming deal. I think it's like $50 to $75 a year or something like that for access to, I guess, quote unquote, the gold standard of online kind of accounting software. But if you're working in the medical field or you have medical billings, that's a whole nother nightmare because of the HIPAA requirements and such, and trying to make those secure and online to be able to access is a pricey proposition, to say the least. And so it's a real struggle. And actually, Lisa pointed out something great when she was talking about it for reporting purposes. A lot of not just internal reporting and being able to put together like a budget to actual report on grant reporting, but governmental reporting. You talk about somebody stuck in the dark ages. I don't think it was too long ago that the IRS moved away from like carbon copy paper, and a lot of these grant reports that are required. I just had one the other day. I had to fill out by hand on a fillable PDF, to be honest, because the reporting system wasn't allowing me to change numbers that needed to be changed. So, it can be frustrating and it can be time consuming. And I guess my suggestion to any nonprofits that are out there is to try and engage with your community partners to see and ask questions of like if you have a CPA, if you're an auditee, if you have an audit firm, reach out to them and ask them if they know of alternatives for, like, because they've probably had to make the same kind of move or have clients in similar positions to try and tap your network, I guess, to be able to find solutions that have worked for other people. That's the great thing about the nonprofit community, is there's a lot of sharing of information. It's not locked down like a for-profit business where you don't want to give away your trade secrets. They may not give away their donor list, but they'll definitely give you insight into how, there's a lot of sharing there. So, reach out. But, simple things like Google Drive is available. Google has a great program for supporting nonprofits for not just search optimization, but also back-end cloud storage that you can tap. You can apply pretty easily for like a grant to have access to that. We mentioned TechSoup. I think there's a lot of resources out there for nonprofits, but sometimes it's hard to know where to find them. So find somebody that has that like conduit to, or has been there and done that kind of thing, and try to see if you can glean something off of that. But hopefully some of those tips help, because I think definitely nonprofits often are stuck kind of 10 years behind just because of the nature of what they do as far as technology goes, and props to those that are up front and have had made that switch. I think you saw smaller or more agile nonprofits be able to adapt to this a lot better at the beginning of the pandemic. So actually, I'll roll us into our next article here. It comes in we're going to just switch to the other side of the table. Essentially, there was a Journal of Accountancy article that not-for-profit auditors face new challenges amid the pandemic, and this gets to exactly the other side of the table that I was just talking about, where accounting firms now have to essentially audit remotely in what was usually a very face-to-face, paper-orientated, depending on who your client was, system. So they're seeing, essentially the same kind of thing that we talked about from the nonprofit side, but from a public accounting firm side. If you weren't set up to be paperless or to be a remote, to perform a remote audit, and I don't think anybody was doing a completely remote audit before the pandemic, but essentially you were forced into it, and meaning that. So they kind of go through a checklist of what they think, best practices is, and how to essentially ramp up your team to do this remotely. So they say communication is essential. I think it goes without saying, being able to have open lines of communication, and that needs to be digital now, and not just over Zoom, but potentially like a Slack or a Discord kind of message server that you can tap into somebody and get an answer to a question at a keystroke away, other than having to clog somebody's email up with a simple question. I think is really important. Remote auditing best practices they talk about. So documents during a video call, if you do the old school way of confirming a bank by, actually sending out a confirm, good luck getting back anything that's readable. I think the alternative was sitting over somebody's back and watching them log into the bank account and pull up a statement or an account balance as of the date of the audit was usually like your best bet on trying to get accurate cash balances at the end of the year, than sending out an old paper confirm to a bank and getting routed 5 different ways and then giving you a different balance on a different day. So, learning how to record and document that stuff and put it into an audit work paper can be quite a challenge. And then risk assessments, they talk about part of auditing is you have to assess the risk of the organization. Well, you're talking about now moving from, probably some nonprofits moving from a paper, and pen sort of way, check writing, to a paperless bill pay system or something like that, and an online accounting system. And the risk there change. So be cognizant, I guess, if you're working in a public accounting firm, that, all that. And, with that goes scrutinizing internal controls. And it's something we can talk about later, but, nonprofits are held to a much higher standard, just because the majority, if you're a nonprofit, chances are you're probably getting audited at some point because of a grant or a requirement, or you're forced into it because you got federal grants. So a high emphasis is put on controls, and just make sure that your separation of duties are still there. And then, of course, fraud risk. I mean, you're talking about increased fraud risk with these new systems. Economic relief payments, making sure those are documented correctly. This goes for both sides of the table. If you're auditing it, make sure that they're, not calling it a grant before it's forgiven, and vice versa from a nonprofit standpoint. And then they talk about going concern and subsequent events. Every audit should have a footnote regarding the pandemic now and the response to it and the unknown kind of future of it. But I'd like to get your guys' take, see if there's something they missed, or if maybe they're being, kind of overblown in their, or, kind of, I guess, pushing it to a limit where it sounds a lot worse than it really is.
I think given the nature of not-for-profits in general, and, we talked about kind of that whole lack of technology or minimal use of technology in some of the smaller not-for-profits that just don't have the cash flow to invest in that. I think it's really important, because if we're doing a lot of things manually, if your auditee is doing a lot of things manually, you really need to focus on making sure that the internal controls are there, and that they are making sure there's segregation of duties, and that you're making sure that what they're doing is in compliance with the grant agreements and all that. And it's harder, again, when you're working with paper. So you're going to have to get scanned copies of documents, and how do you know that those haven't been altered, right? I mean, so there are other issues that will come up in those kinds of situations that, when you're dealing with someone who is more paper-based, are going to be a lot more difficult to deal with than someone who is probably much more electronic.
Yeah, I want to piggyback on what you were saying with the internal controls, because if you think about it, it's like usually you have this set of rules and procedures that is tightly controlled and you know exactly how things are going to be done. Then all of a sudden you're told a year ago in March, well, everything's shutting down and we'll see you again in 2 weeks. And 2 weeks effectively turned into a year for a lot of people. So are you writing new internal controls on the fly? Are you making it up as you go along and then just creating some internal controls at audit time to tick the box that you have these procedures in place? Because it's not something that was well thought out. It was like, what's going to work to keep us going, and then we'll just build around it. And I think as an auditor, that's a tricky line to cross to make sure that the pieces, the separation of duties, like you were mentioning, Lisa, or some of these other aspects that need to be carefully scrutinized are still able to be followed in this completely foreign environment. One of the other things that the article was talking about, which I hadn't really considered, but was interesting in the going concern piece, is a lot of nonprofits, right? They're basing their futures on these large fundraisers that they might have at some point during the year, and then they haven't had those, right? Or they've scaled them way back to have some sort of online fundraising perspective, and as a result, here they are looking like they brought in no money. The only cash influx they might have is from PPP or something like that, an EIDL grant. But here they are looking really cash poor. And do you make a going concern judgment, or do you look at that and say, well, once everything opens up again, they'll have that fundraiser again, and I believe they can make it through this? So I think there are different interesting decisions, not so interesting for the client, but interesting for the auditors to determine what they're going to do moving forward.
I think you bring up a good point, and it was something that I was thinking about while both of you were talking. Was one thing when I was doing public accounting and auditing nonprofits, was we always tried to provide, even if they had a clean audit and they were the best client ever, we always tried to provide some kind of value add and make suggestions at the end of the year to our clients. And I think as an audit firm, you don't want to get in the weeds of what they're doing, but I think this provides an excellent chance for CPA firms to really put a value add on what they're doing and give really good suggestions. So if you're listening and you're in a public accounting space, I would highly recommend you take a long look at your client base and realize that they're going to need some help and some suggestions at the end of that audit to try and help steer them, and it could be making them aware of the second round of PPP. With all the news cycle that we have, they might not be aware of the benefits out there to nonprofits during this pandemic, and you might be in a unique position to tell them about it or to help them stave off, a going concern type of situation. So, I think there's an opportunity there, I think, to make sure that your clients are well served. But Mark, you got another article for us?
You bet. This is an article that we're going to call a cautionary tale. It's from Arizona Central, about a university called Grand Canyon University, and they're suing the Department of Education over their nonprofit status. And this is going to lead us into a segment we're going to call, topics in nonprofit accounting. But for this particular university, they were approved back in 2018 by the IRS, their 501c3 or whatever it is for a university, their nonprofit status, basically. But the Department of Education has turned around and denied them their nonprofit status. So they're sitting in this place of limbo, not knowing which is correct. And, the initial take on this is, oh, these, they should be granted that status, these poor guys. But then you read deeper into some of the things they were doing, and they were acting in accordance with the for-profit arm that also had the name of Grand Canyon University, and were, the for-profit arm and the nonprofit arm were a little bit too commingled. There was I think the head of both of them was the same person, and it started to smell of shenanigans, if you will, and so the Department of Ed said, no, we're not going to grant this. It doesn't smell like a nonprofit. It smells like a for-profit university. So now they are at loggerheads, and they're trying to sue the Department of Ed to say, we really should be. And it just kind of goes to show there's a tricky line to walk when it comes to A, getting your nonprofit status, and B, realizing what it really means to be a nonprofit. And if you're just a nonprofit in name to prevent, and one of the things locally that's a big factor in this that I should mention is the payment of property taxes, right? This is a university sitting on a lot of land. And if they're granted this nonprofit status, they don't have to pay property taxes. But if they're granted for-profit status, then all of a sudden they have this big tax bill coming due. So it definitely hits them in the pocketbook, and it's a tricky situation because for-profit universities and nonprofit universities can look similar, but the driving factor behind what's behind them is very different. So I'm interested in what you guys think about this.
Well, I think this is a cautionary tale, I think, for any nonprofit, not just for a higher ed nonprofit, but just because you have your determination letter in hand doesn't mean that you're forever going to be a nonprofit. You have to be, you get nonprofit status and special tax exemption based upon the fact that you're doing public good. And I think you need to do everything possible to maintain that. And I think some nonprofits lose sight of that, where they have their determination letter in hand and it's off to the races. But, on the 990, you have to do a public, funding determination to make sure that you're over a threshold. And if you don't meet it for a certain number of years, you can have your 501c3, revoked, and you become essentially just like any other business, and you'll be having to file a corporate or a partnership, return as opposed to a 990. So I think it's a cautionary tale to do what it takes to be able to maintain your nonprofit status. And it's not just for rulemaking purposes, it's for the public. I mean, you're a public entity essentially, in the fact that you're going to be publicly funded either through grants from the state, private foundations, or the government, or you're actually taking a combination of thereof, of taking actual donations. And I think it's, it can be a problem, if you try to, be creative with your nonprofit and enter into an area that causes unrelated business income. You need to be aware of that and be aware that that could cause, a separate part on your tax return where you do have to pay taxes. So I think, being in contact with your CPA that's doing your audit, if you're in that situation, or, every nonprofit should be filing a 990 at the end of the year, unless you're a church. You have to be in contact with your CPA and have a good line of communication there, and have somebody, competent that's running the accounting and is aware of these kind of things. So you don't find yourself, and, it can happen to a big organization like Grand Canyon University, or it can happen to the small nonprofit that started off with the best of intentions, but moved into, acting more like a for-profit business or not being funded by the public anymore. So I think it's a cautionary tale for everybody out there, and just to be on your toes and be aware of what your responsibilities are as a nonprofit.
Yeah, and what I found interesting too was that in the article, it said the Department of Ed questioned whether the school operates mostly for the benefit of shareholders of a for-profit company. And that was part of the reason that they were denying the not-for-profit status. And so, they called them a captive client, right? So I think you got to wonder, you got to be concerned and think about the relationships you have with other organizations as well, and how that affects your not-for-profit status. So it's not necessarily just the school. If it were the school on its own, I think the outcome might be a little bit different in this situation, but it's that relationship they have with the other organization, that for-profit company, that sounds like it's driving the decision by the Department of Ed. And so I think that those kinds of things really need to be looked at very closely when you're talking about maintaining not-for-profit status. Okay, we're going to be done with the news articles now, and we are just going to move to a generic topic in not-for-profit accounting, and I'm going to let Mark start us off.
All right, yeah, so we're going to try something a little different here, and I think because we have kind of a brain trust of nonprofit knowledge here from all sorts of different various backgrounds, I thought since this is our first podcast, it might be beneficial for us to just kind of discuss the topic. What are the differences between nonprofit and for-profit accounting? You hear the term nonprofit, you kind of know instinctively what it means, but yet there are some topics that will delve in much deeper in detail in coming podcasts. But I just kind of wanted to leave this general thing out there. And anybody out there listening, if there is anybody out there listening, feel free to comment on YouTube and let us know what do you think we might have missed in this conversation. AJ, why don't you start us off and give us something that you think is a difference between nonprofit and for-profit accounting?
Sure. So, I mean, you can make the big distinction if you want to talk about governmental accounting, because they still use fund accounting. But I think if we're just talking about a general 501c3 or a nonprofit or a public foundation, I think the big difference mainly is that your net profit is an addition to your net assets at the end of the year. And so there is no like retained earnings. There's no owner of the business that you plug, earnings to, essentially. Despite the name of the podcast, most nonprofits hopefully are making some kind of profit at the end of the year. You're not barred from that. But I think that's a major difference. But I also think that, it digs deeper if you're not talking about nuts and bolts accounting and you're talking about how, I guess, what the onus is or the differences between like a for-profit, like small company versus like a small nonprofit. You can really get down to the fact that like grants, you're essentially given money by a foundation, people, the government, to perform a task or to perform a service. And with that comes strings. They're not just going to throw the money at you and say, good luck with that program. Oftentimes you have to report back to the grantor. You have to show them how the money was spent. You're often open, not just for a public accounting firm to audit you, but a grantee to come in and audit you, especially when it's a state or a local county or government. They can come in and look at your records and make sure that what you're claiming on your invoices are actually what expenses went out for that program, and that you were correctly coding and had proper controls over, people, so I guess a major difference there is then if you contrast that with like a small for-profit businesses, there's not as much onus. There should be as much onus, but there usually isn't as much onus on control structure and making sure that everything is approved that's paid for, and making sure that there's executive review, there's separation of duties and what's going on. That onus is much more on a nonprofit than it is on a for-profit. And then tracking your spending and your receipt of revenue. Oftentimes, like you can speed it up and but I don't know. I probably rambled on too long. Lisa, can you think of some more, differences, I guess, between for-profit and nonprofits?
Obviously the not-profit. I think a lot of things with the not-for-profit are a lot more granular. As I think about some of the not-for-profits I've looked at or have worked with recently, you're looking at things at a much more granular level than you do in a for-profit business. The last company I worked with had probably, if we're talking about accounting strings, they had account, fund, program, location, day of the week. I mean, they had gotten so granular in their reporting that they knew pretty much like almost every person had their own little accounting string, and everything they did related back to that. So it's just, and then all of that reporting somehow gets tied back to, as you were talking about, AJ, the grant reporting. And I think that is, and that puts a bigger onus on them as well, just to make sure that they're able to supply that data when they need to and to who they need to.
I'll add to that. I think I'm going to talk bigger picture. I think one of the key differences between the two is mission driven, right? In a for-profit company, you're there to make money. You're there to really improve the bottom line. And for those of you who are working or want to work in a nonprofit sector, there's a completely different mentality when you start working there, because you're not working to improve the bottom line. You're working to serve a mission. And so that could be in a school, that could be in a museum, that could, to a lesser extent in governmental accounting, but there's a real passion to serve a greater good and to serve a mission of an organization in nonprofit accounting, which, there's a real passion to the bottom line in for-profit accounting. And sure, there can be a desire to do good in the for-profit world as well, but a lot of decisions are being made on the bottom line in a for-profit accounting, whereas a lot of decisions in the nonprofit world are being made to serve the clientele that you really want to serve. AJ, throw another one at us.
Well, one thing I was thinking about was the difference between, and we talk about not worrying so much about the bottom line, but worrying about the mission program. One thing that I think that I guess is, I wouldn't call it disturbing, but a trend that's kind of emerged was this guide star where they look at how much of your administrative cost is to your overall program budgets or what's spent on, serving your nonprofit. And for some reason, 10% was kind of, if you're below 10%, you're doing a great job. If you're above that, wow, like less than 90%, 90 cents on the dollar is going to programs. But I think what they leave out of that equation, and maybe I can have you guys bring in on it, is, we talk about, Lisa talked about reporting, I've talked about reporting, and we talked about being more mission driven and being more granular about the accounting and just information. But oftentimes that means you have a heavier admin burden, and it's due to compliance and, like essentially the granular nature of grant reporting and project reporting that's available. So I'd like to get your guys' take if you think that 10% threshold is, like appropriate, or maybe I think GuideStar to some degree or Charity Navigator maybe has skewed the way people look at that admin cost.
I would agree with you. I think that the admin cost, I think 10%, when you look at it overall, depending on how they're accounting for things, obviously, but you've got to have an IT infrastructure in place, especially now with the pandemic. You've got to have a strong IT infrastructure in place. You got to have laptops for your people. You got to have, people are working at home. You got to have all of that equipment, which, yeah, maybe it's capitalized and you're not going to see it as an expense. But, honestly, I think that in order to be able to support that, you're going to need more IT folks. Right? You can't do everything manually, so you're going to have those kind of folks on board. I think you're going to see a little uptick probably, through the pandemic and maybe for a few years beyond as people ramp up thinking, what if this happens again? And I don't think that 10% is going to hold as a good number, in this time.
Yeah, and I know, from my world of nonprofit accounting, the expenses tend to be very payroll heavy because it's getting more people to serve the mission as opposed to being as lean as I possibly can be to build a profit. And, some of these payroll positions do function to work toward, the mission, but some are administrative. And I think both of you are exactly right. There needs to be an assessment on a maybe a sector per sector basis, because, how are you going to determine? I remember years back, I think it was United Way got in real trouble because their administrative costs were so high and the salaries of their executives were super high. And, they were comparing that with other organizations. And although there were probably some things that United Way was doing wrong, to compare one sector of nonprofit accounting against another is a little bit specious. And I look forward to discussing those kinds of things. And one of my favorite nonprofit reports, the functional expense report, in some future podcasts.
Well, that brought up a good point, Mark, because I was just thinking about that. The last client that I was working with, they did a lot of medical, a lot of psychological work. So they had probably 20 or 25 people doing medical billing and medical records. And if you're working with an organization that has absolutely nothing to do with that, you don't need the 25 people, right? And so you definitely have to look at what they're doing and what mission they're serving and what kind of programs they're offering in order to determine whether or not that 10% would be a reasonable amount.
So that's probably a huge deal. Like you can find sector information on like if you're a manufacturing company or if you're, but the difference with nonprofits is they're just all kind of lumped in the same thing. And to Lisa's point, if you're a medical biller, you probably need 25, you probably need 26, but you can't afford the other person to do medical billing and to maintain those records. But if you're like a small, community-based food bank or something, say, you probably only need one or two accountants and an HR person, and you try and ink out the controls around those three people. But like that admin structure is going to look much, an admin budget and what percentage of the revenue that takes up is going to be much different than, the medical billing or the really admin intensive, like governmental program grantees, that require more accounting and more granular kind of, development of, parsing things out. So yeah, I think that would be great to see more of like business segments, for lack of a better word, in nonprofits, I think. And that's something that would be welcome, I think, in the community.
Well, thanks, AJ. I think you and Lisa both have the right idea. And I think we'll be looking at these topics in greater detail over the coming podcasts and many more to come. Thanks for joining us on this first inaugural episode of the Profitless on Purpose podcast. We've really enjoyed being here and sharing our passions of nonprofits with you from an accountant's perspective. And we hope you join us next time. Have a good one.
Thanks, everybody.
Thanks.